Welcome to this video on financial management. My name is Joel Christensen, and I'm with the Community Development Unit of Alberta Culture, Multiculturalism, and Status of Women. Before I begin, I'd like to mention that the goal of our board development video series is for board members of nonprofit organizations to have the basic knowledge, skills, and tools to be successful in their work. We realize that some of you are not board members, and that's fine. But we want you to be aware that the information, concepts, and ideas presented are from the board member perspective. Also, the information presented here is aimed at an introductory level or as a refresher for board members to ensure that they have the base level understanding of board governance concepts and principles that are needed to successfully do their work. We do have other resources that we can share with you, such as our toolkit. In the description of this video, there is a link to our toolkit, which provides additional resources and links that we think are helpful for you and your nonprofit organization as you tackle your governance issues. Included in this toolkit is a copy of the slides we use in this video and all the videos in our board development video series. You can also hit the subscribe button down below and turn the notification on to subscribe to our YouTube channel and get notification when our upcoming videos become available. The last thing I want to mention before we get going is that in this video, we are not providing advice. The information offered in this video and the related materials are not intended to constitute legal advice, the rendering of legal concepts, consulting, or other professional services of any kind. We simply want to share with you information that we think will be helpful for board members as you navigate your organization through its governance and operations. By the end of this video, you will be able to explain the board's role in the financial management of the organization, explain what financial management is, explain the components of financial management, explain how the board can delegate aspects of its financial management of the organization, and identify the key financial documents that should have a consistent format and be regularly made available to the board and all board members. In the financial responsibilities video, we discuss the responsibilities of the board in a broad way. It's important to see the broader view of the board's responsibilities as an overview and a reminder of how those responsibilities overlap and support one another. In this video, we will discuss the specific responsibilities of the board in financial management of the organization. What is financial management? We have a couple of definitions that will help describe what financial management is. Financial management is the management of the financial activities of the organization. For nonprofit organizations, financial management can be described as the managing and accounting of funds to ensure that these funds are spent in accordance with board objectives. Since we're talking about nonprofits, it is important to recognize that funds should be spent in accordance with board objectives, because it is the board's responsibility to ensure that the organization's financial activities are linked to the organization's programming and operations. What does successful financial management include? It includes a few different things. Numbers 1 and 2 are a clear financial strategy and a plan for generating income. When you do organizational planning, you discuss strategies and plans that take place over more than 1 year. Those strategies and plans are the board's and the organization's view about what needs to happen in the future. Regarding financial responsibilities, you should think specifically about what's going to happen with the organization's finances. For example, how will your organization acquire the income and resources it needs to do the things it has planned to do? Where are you going to get the money that you need? What are the ways your organization can ensure that these plans will be achieved? These questions are answered by creating a clear financial strategy and a plan for generating income. What does it mean to have a robust financial budgeting and reporting system? And what are some of the structures that you need to have in place to ensure that you have an accountable internal environment. Both of these aspects of financial management are done throughout the year and are repeated every year. A robust financial budgeting and reporting system is related to your answers to a few questions. What goes into the budget? How does your board create the budget? And who else is or could be involved in the creation of the budget? Does the board receive regular reports on the state of the finances? How do you know what is actually happening with respect to the finances of the organization? And that's really about reporting. Another question is there a yearly evaluation of the financial activities of the organization? An accountable internal environment is also very important because no matter how small or how large your organization is, you want to have that accountable internal environment. In other words, you want to be able to prove that your people and processes ensure successful financial management. Let's first focus on a robust financial budgeting and reporting system. Linking plans to budgets is important to think about because this is when you are actually starting to make a connection between where your organization wants to go and how you plan your finances so that the organization can get there. You create that connection between planning and resources in your mind and in the discussions that you have at board meetings. As it says on the slide, your budget is your plan and priorities set out in numbers. This means that the plan of activities for the year guides the creation of the yearly budget. They mirror each other. The plan describes the activities, and the budget describes how resources will be obtained and used to ensure those activities can be accomplished. A budget is the financial plan of action based on the board's decisions for the future of the organization. Since the budget is a plan, you want it to include how much you're going to spend, when you will spend it, and on what activities. It is also a plan about what funds you're going to get and when you will get these funds. Perhaps you have a regular schedule of grants that you get once a year, or maybe you have a grant for the first time. In either case, you know when you expect to receive the funds, so planning that and putting it into your budget is very important. The budget is also a tool to monitor the organization's financial activities throughout the year. Did your budget reflect what actually happened? Budgets are your plan and priorities set out in numbers. The budget is based on the board's decisions for future of the organization. The budget is a tool to monitor financial activities throughout the year. Budgets are used in planning and controlling an organization and encourage forward-looking and alignment with strategy. Budgets should be based on reasonable expectations developed based on your past experience, your activity plans, and industry norms. Capital budgets, which focus on the organization's facilities and buildings, should be separate from operating budgets, which focus on the organization's programs and day-to-day operations. We talk a lot about asking questions. When you're creating your operating budget or you're reviewing your operating budget, there are a few questions that you can ask. Does the budget reflect the organization's priorities? If you have a plan that includes your priorities, or even if you don't have a plan, you may already have an idea what your organization's priorities are. So the budget should reflect those priorities. What are the fundamental assumptions upon which the budget has been prepared? What has happened in previous years? When do you expect to receive money? When will you need to spend money? Do you expect the programs and services to be similar to the last year, or will they be different? What did you learn from last year's budget that you want to implement this year? Who is responsible for monitoring and controlling budget expenditures? This is an important question to answer. How does the board ensure that proper and necessary expenditures are being made? What are the board's budget policies that govern the preparation and control of the budget? Who is responsible? In the end, the board is. So it is helpful to have policies, processes, and people in place to ensure that monitoring takes place as well. Create policies and processes and encourage the people on the board to use their knowledge, skills, and behaviors to ensure active oversight of the budget. Knowledge, skills, and behaviors include perspective, participation, good judgment, and courage. What are budget and variance reports? Budgets are projections of what is expected to happen in the future and when. Financial statements show what actually happened during a specific time period, or they provide a snapshot of the finances as of a specific date. The variance is the difference between the projected amounts, the budget, and the actual amounts that are found in the financial statements. Variance reports compare the budget, the projected amounts, to the financial statements, which are the actual amounts. We define and explore financial statements in more detail in a minute. Budget and variance reports are crucial reports for board directors. Compare budgets to actual for both revenues and expenses. The board can set standards for variance. They can use percentage or actual dollar values to show those variances. And variances are analyzed and explained. So why did the variances happen? Variances are deviations from expectations. Their usefulness is entirely dependent on how expectations are developed. Variances can be indicative of a change in revenue or costs, the activities of the organization, or both. Variances should always be explained. Now let's take a look at a budget variance report. When looking at this budget variance report, you may ask yourself several questions. For example, you may ask, why did the total revenue decrease so much? Why did advertisement costs increase? How did we decrease office and administrative expenses? The budget variance report is a great source for important questions that board members should ask. Not all of us have a great deal of experience with finances and accounting, but as board members, we do have that fiduciary duty of active oversight. So asking questions is a good way to be active and learn about your organization. If you have questions, write them down when they come to you and ask them at your next board meeting so that you can find out the answers. Here are some general things about financial statements. Accounting standards say they must be timely, meaning you should see them when the information is still relevant. They should contain reliable and accurate information. They should be consistent with previous versions and with other financial statements. They should be comparable to previous versions of the same document, and they should be reasonably understandable. However, if you don't understand them, ask for help. Take some basic accounting courses, watch YouTube videos, and, you guessed it, ask questions. What are financial statements? Financial statements are a formal record of the financial activities of a business, person, or an entity or organization. The main financial statements of organizations are the statement of financial position or balance sheet, the statement of operations or profit and loss or income statement, and statement of cash flows. The balance sheet is also known as the statement of financial position. Balance sheets answer the questions, what assets does the organization have, or what does it own? What liabilities does the organization have, or what does it owe? And what are the changes between balance sheets from different dates? Balance sheets usually show balances as of a specific date, for example, January 31st, 2021. Depending on the way you've decided to set up your balance sheet, you could show that the net assets equal the total assets minus total liabilities, or the total assets equal total liabilities plus net assets. In either case, the results are the same. It's just different ways of doing the math. Here is an example of a balance sheet or a statement of financial position. It shows what the organization owns and what it owes. You may look at this statement and think, what is deferred revenue on this line and why is it so high? You may also ask, why does the organization have such high liability compared to its assets? These are great questions you should ask in your board meetings and ask others or the accountants of the organization to explain what they mean and why they are like that. The next one is profit loss statement, which is also known as the statement of operations or the income statement. Income statements refer to a specific period of time and answer these questions. Where did the income or revenue come from and how much did we get? What did we spend, or what did it cost to earn that revenue and carry out operations? What is the difference between the amount of income and the amount of expenditure? Here is an example of an income statement or profit and loss statement. Looking closely at this statement, you may ask, why is there such a big difference between the grant revenue that we anticipated and the revenue that we actually earned? This could be a welcome addition to grant revenue, or it may be an oversight in the creation of the budget. The important thing is to be sure why there is a difference in the two amounts, and either continue the positive change or correct the mistake. Why did we spend almost twice as much on operating expenses than what we budgeted for the month of August? Again, this may be a welcome change, or it may be a negative change. In either case, you will want to learn more about how and why it happened. The last statement we'll take a look at is the statement of cash flow, or the cash flow statement. Cash flow statements are the most important statement of an organization. Cash flow statements focus exclusively on cash and cash equivalent. They show how the organization generates cash, and they show how cash is used in the organization and for what purposes. Note that it is also a profit and loss statement that records the transaction, even if no money has changed hands. Cash flow statements record when the money actually changes hands. Together, the two statements provide some perspective on the activities of the organization. Here is an example of a cash flow statement. Looking closely at this statement, you may ask, why did we earn $40,000 from operating activities, whereas we earned $70,000 last year? Why is there such a big change? Or you may ask, what is the amortization of capital assets, and why is it less than last year? Similar to the previous examples, these are great questions that you or any other board member may ask. You need to ask these questions to be able to understand these statements and have a better understanding of the financial situation of the organization. There may be very good explanations for what happened, but you won't know unless you ask and learn about them. And when you learn about them, you will have a more complete understanding of the financial situation of the organization, and you will be more prepared to discuss the organization's finances and activities, to prevent or solve financial problems of the organization, and improve on the work of the organization. Let's revisit this slide. What does successful financial management include? To see where we are in our learning. We talked about number 3, the robust financial budgeting and reporting system. Now let's spend some time on number 4, an accountable internal environment. When we talk about an accountable internal environment, we're really talking about a system, an internal control system that includes behaviors and processes that ensure good communication and security. Let me just emphasize here that an internal control system is not only about processes and systems, it's about behaviors as well. You have board members and you have a culture within your board that includes integrity, willingness and ability to listen, and asking questions. We already mentioned good judgment and courage, just to name a few of the behaviors that board members should have. You will have a board with some of the behaviors, skills, and qualities that will make your systems and processes more effective and reliable. So let's look at a few of these elements in an internal control system. An audit trail looks at the accounting processes and financial statements that can be followed for any item in an accounting record. Auditors follow a transaction through the accounting process. The steps that the transaction goes through make up the audit trail. You need a satisfactory audit trail if you want to find out where mistakes were made or if more detail is required in your accounting processes. Reliable personnel. Use knowledgeable, skilled, and trustworthy staff and volunteers in important financial positions. A financial control is only as good as the people who implement it. Segregation of duties. Ensure that critical financial processes are divided up between at least 2 different people. Proper authorization. Ensure that those who are performing financial duties have been given the authority to do so. Proper procedures. Ensure that financial procedures are clear, consistent, and reasonable. Physical safeguards. Ensure that critical financial information, such as accounting numbers, checks, and credit cards, are in a safe place where only authorized personnel can access them. Creating and implementing internal controls is a great way to secure the finances of your organization. To put it bluntly, internal controls are your way to ensure that your organization has better oversight of its finances and is less likely to deal with financial mistakes or even fraud. Here are a few examples of internal controls. 2 signatures on checks. Invoices with checks, making sure that the invoice matches the number on the checks. Segregation of duties. If you have a process that has 3 or 4 steps, use more than one person to go through that process to ensure that there is not just one person in charge of that process. Prepare an annual budget. Compare the budgeted results with the actual results. Ensure that bank reconciliations are completed. Bank statements should be sent to the bookkeeper. Perform an annual audit or review and a related checklist to ensure that everything you need to have in the audit and review is completed. An attitude of skepticism. If you think there might be something going on, ask questions about it and find more about it. Skepticism is not always a negative thing. Rotation of duties. If different people have different roles in a financial process, make sure that they switch them up so they get familiar with the entire process. And include position descriptions for treasurer, finance committee, audit committee, and the executive director. Does this list contain any new examples of internal controls that you could use in your organization? Board financial policies should cover all aspects of financial management, which includes a clear financial strategy, a plan for generating income, a robust financial budgeting and reporting system, and an accountable internal environment. Keep in mind that only the board can approve policies. Others, such as committees and staff, can draft policies for board approval. This saves the board time and work, it engages others in the organization, and still ensures that the board has the final say before the policy is approved. There are different structures that can be involved in financial management. Certainly the board is one of them. If you have a finance committee, they're involved. You may even have an audit committee that is a subcommittee of the finance committee. The treasurer on the board, staff, management staff like the executive director are involved. A bookkeeper is also involved. Which structures you have will depend on the size of your organization and the number of staff, committees, and volunteers that you have. The responsibilities of a finance committee. The purpose of the Financial Committee is to work with the Treasurer in governing the financial affairs of the organization. This committee's primary responsibilities include ensuring management takes appropriate action on the auditor's recommendations, a review of interim financial statements and recommends follow-up action to the board. It oversees the development, implementation, and monitoring of the annual operating and capital budgets. It develops financial policies for approval by the board. It ensures compliance with all relevant regulatory bodies, and it ensures that financial systems, reporting, and analysis can protect the organization from theft and fraud. The audit reviews how a transaction goes through the accounting process from beginning to end, and it includes how that transaction is seen in the financial statements and what financial management processes are attached to it. Auditors look for evidence that the accounting information provided to them is a fair presentation of the organization's affairs. Does the accounting information actually represent the accounting processes that an organization has? Auditors will test that accounting process. So the auditors will review on a test basis the transactions and balances comprising the results in the financial statements, but they do not review everything. Now we would like to give you a moment to reflect on the information discussed in this video. How does your board ensure that its financial responsibilities are met? What might you do to improve your board's ability to meet these responsibilities? These are great questions to reflect on individually or discuss at a board meeting to ensure that you can fulfill your responsibility related to the financial management of the organization. This brings us to the end of our video on financial management. Thank you for watching. Our contact information is on the slide and they are in the toolkit as well. If you are in Alberta and you have a question, you need further information, or would like to request services, you can contact us through email and phone. You can also access our website to know more about our resources and services. And also, if you want to be informed of our future services and resources, you could add your email address to our subscription form and you will receive information about our services and resources as they become available. The link to the subscription form is in the description of the video as well. Thank you for your attention. Take care, stay healthy, and always remember that our communities have so much more because of everything you do. Thank you, and bye for now.